What's going on, crypto family? Welcome back to another episode of Gold Rush Crypto Daily, your go-to show for real-time reactions and analysis on the hottest stories in the crypto world. Today, we're diving deep into SEI, the SEI network token. I've got two interesting articles here that are both talking about the same thing, but from slightly different angles, and I want to break them down with you live. The market's been a little quiet, so any potential for a breakout is a big deal. We're going to look at why a lot of people are getting excited about SEI's price action right now. So if you're holding SEI or thinking about it, you're not going to want to miss this. Quick reminder before we jump in. If you're new here, make sure you hit that subscribe button and turn on notifications. It helps the channel out, and it makes sure you don't miss any of our breaking crypto news reactions. All right, let's start with this first piece, coming from a well-respected outlet, Brave New Coin. They're usually pretty good about sticking to the data and avoiding too much hype. The headline reads, SEI market cap nears $1.8 billion with technicals suggesting breakout potential. This is exactly what we want to see, a headline that's focused on technicals, not just pure speculation. It sets the stage for a data-driven discussion. The article starts by saying SEI is approaching a key milestone with its market cap nearing $1.8 billion. And technical analysis points to potential breakout momentum. Okay, first sentence, big takeaway. $1.8 billion is a psychological level. It's a marker of maturity for a project. Nearing that number, especially after a period of consolidation, is what gets traders' attention. It says, comparisons with historic cycles of similar projects and current price action indicate that the asset may be in the final stages of accumulation before a significant upward move. Final stages of accumulation. Let me break that down for you guys. That's a classic technical analysis term. It means smart money. The institutions, the big wallets, have been slowly buying up the asset without causing a massive price spike. They're positioning themselves for a big move. This is the quiet phase before the storm. Then it gets more specific, mentioning an analyst, Ollie, who notes that SEI's current price structure closely mirrors SUI's earlier consolidation before its sharp rally. See, this is what I love. This reminds me of when we were seeing similar fractal comparisons with SOL and AVAX back in late 2021. You saw one layer, one project make a huge move, and analysts would look for similar patterns in others that hadn't moved yet. It's a classic play in crypto. But you have to be careful. A fractal comparison isn't a guarantee. The market conditions are different, the liquidity is different. It's a reference point, not a crystal ball. Market snapshot shows renewed buying near resistance. Brave New Coin's market data places SEI at approximately 30 cents, up 2.04% over 24 hours, with a market cap of around $1.77 billion. While late session profit-taking caused slight pullbacks near resistance, the overall scenario reflects buyer attempts to push higher. Wait. Hold up. This is a crucial detail. The fact that buyers are attempting to push higher, even after some profit-taking, shows sustained interest. It's not a pump and dump. It's a real battle at that key 30 cents resistance level. That tells me there's genuine conviction here. On the daily time frame, TradingView charts reveal SEI trading near $0.296, with Bollinger Bands tightening between $0.282 and $0.316. Price testing the lower band signals a risk of downward pressure if support fails, while the MACD remains in negative territory. Okay, I need to slow down here for a second and clarify this for our viewers. When the article says the Bollinger Bands are tightening, that's a classic signal. It's called a Bollinger Squeeze. It means volatility is decreasing, and it's a precursor to a big price move. The market is coiling like a spring, getting ready to release. The direction isn't set, but a move is coming. But here's the red flag they mention. The MACD is in negative territory. MACD is a momentum indicator. A negative MACD means the short-term moving average is below the long-term one. That's a bearish signal. So you have a squeeze, which predicts a move, but momentum is still to the downside. This is a textbook wait-and-see situation. The article even says, watch MACD momentum closely for signs of reversal. This is smart, cautious advice. So, to summarize Brave New Coin's take, SEI is showing strong accumulation patterns, similar to past crypto successes. We're seeing a battle at the 30 cents resistance. The Bollinger Bands are screaming a move is coming, but the MACD is telling us that move isn't confirmed as bullish just yet. My overall reaction? This is a very sober, data-driven report. It gives us a great technical foundation to work from. But wait, there's more. Let's see what this second article says and if it confirms or contradicts this analysis. Remember to hit that like button if you're finding this useful. And we're back. Now let's check out this piece from Captain Altcoin. Interesting. This was published roughly the same time as the first article, but it's referencing a different analyst named Rand. It's important to look at multiple sources, especially with technical analysis. This will help us confirm the setup. The headline is a bit more direct. Here's where SEI price could go next if this breakout setup plays out. Analyst. The article immediately jumps in, quoting an expert named Rand, who pointed out that SEI is bouncing over the confluence of supports on the 29 cents range and is still consolidating inside a major bullish pennant. Okay, so this totally lines up with what the first article was saying about the technicals. Brave New Coin talked about the Bollinger Squeeze, and this article is calling the formation a bullish pennant. Let me break down what a bullish pennant is for you guys. It's a consolidation pattern that looks like a little triangle after a big, sharp move up the flagpole. The price makes lower highs and higher lows, and volume usually drops off. It's a continuation pattern, meaning the most likely direction for the breakout is up, in the direction of the original flagpole move. That's exactly what the chart shows. SEI is holding right above a cluster of support levels while trading inside a tightening structure. See, this backs up exactly what I was saying about that accumulation phase. The price keeps finding support at the same area, which proves there is a lot of buying interest there. The tightening structure is just another way of describing the same Bollinger Squeeze from the first article. It's great to see two independent analyses confirming the same thing. If SEI breaks out of this formation with volume, the first targets would be around 36 to 38 cents. If momentum is strong enough, the rally could extend toward the higher resistance area near 43 to 44 cents. Whoa, I did not expect them to give such specific price targets. This is absolutely massive. A move to 36 cents to 38 cents is a significant gain from the current price. And 43 cents to 44 cents? That's what we in the biz call an aggressive target, but it shows the potential. This lines up perfectly with the kind of moves you see after a classic bullish pennant breakout. They're predicting that the flagpole move will be repeated after the consolidation, and those numbers make a lot of sense. The line that matters most is still 29 cents. If SEI holds above it, the bullish case stays alive. If price slips under that level, the pennant setup breaks down and SEI could slide back toward 25 cents or even 22 cents. I've been saying this for weeks on my social media. You need a line in the sand. 29 cents is that line. This is a critical point for any trader. You know your risk. If it falls below this level, the bullish thesis is invalidated, and you have to reevaluate. It's an easy way to manage your trade and not get caught in a potential slide. So we've got two different takes here, but they are incredibly consistent. Both articles, despite coming from different publications and referencing different analysts, are pointing to the same key levels and the same bullish pattern. Here's what I think is actually happening. The first article from Brave New Coin is giving us a more cautious, technically minded view. They see the setup, the Bollinger Squeeze, the consolidation, but they are rightfully waiting for that MACD to flip bullish to confirm the move. They are saying the potential is there, but we need confirmation. The second article, referencing analyst Rand, is a little more aggressive and has already identified the bullish pennant pattern. They've even given us concrete price targets, assuming the breakout happens. They've taken the first article's wait-and-see approach and turned it into here's what to expect if it goes right. The truth assessment is that both are right. The technical setup is beautiful. It's a classic bullish pattern. But the key is patience. The breakout hasn't happened yet. If Article 2 is right and this breakout plays out, we could see a really powerful move, potentially taking us up to the $0.40s. But if it fails to hold that 29 cent support, as Article 1 warns, the correction could be just as swift. Which article do you think got it right? Is the Brave New Coin piece too cautious, or is the Captain Altcoin article too optimistic? Drop your thoughts in the comments below. I want to hear what you guys think. I'll be monitoring the on-chain data and the price action around that 30 cents mark. Make sure you're subscribed so you don't miss our updates in our next episode when we see this play out. Remember, this is my opinion based on these articles and my analysis. This is not financial advice. Always do your own research and never invest more than you can afford to lose. The crypto market is highly volatile and unpredictable. All right, that's it for today's Gold Rush Crypto Daily. Until next time, stay safe out there, and let's go get that gold.